Let's talk about a high-quality company that's really working right now. Snap-on Incorporated, the maker of premium tools and diagnostic equipment for everything from auto repair shops, aerospace, agriculture, construction, mining, military, power generation clients. Here's a stock that's been climbing steadily for ages, up 228% over the last 5 years, up 20% year-to-date, and yet not enough people have heard about it. We keep trying to change that. And it looks like Snap-on has got a lot more room to run, given that the company just reported a pretty robust quarter this morning, delivered a 4-cent earnings beat off a $1.94 basis. Even though sales came in a little bit below what the analysts were looking for, it didn't matter because the company's seeing some of the healthiest organic growth of any industrial I follow. No wonder the stock shot up another $4.03, 2.5% today. Let's dig deeper into the story with Nick Pinchuk, the chairman and CEO of Snap-on. Learn more about the quarter and where it is headed. Mr. Pinchuk, welcome back to Mad Money.
Great to be here, Jim.
Okay, Nick, I think a lot of people don't understand. When I say organic growth, and you have a huge organic growth year over year, it's because you have invented new things that are driving sales. It's not like you just bought a company and tacked on the revenues.
No, that's exactly right. You know, one of the things about us is our people are in garages for more hours, for more days. I was just in a garage myself, riding around on one of our trucks, and during that morning, 2 different people suggested a different product to me. One to take off the oil pan on large trucks, and other thing to worry about Toyotas to get inside the wire harness without disrupting it. So we come out with products all the time. That's what drives our business. You ask ourselves, we make hand tools, for example, and we guarantee them for life. How is it we have a business? Because the cars keep changing. Things like this. This is called the Veris Edge.
Okay.
It's a brand new top.
This did not exist two times ago when you came here.
It didn't exist 3 months ago.
Okay.
All right. This just came out.
Just
came out, and it's setting records. By the way, this thing, faster, lighter than ever before, has more data.
So what do? I hook it up to my... Who hooks it up?
It's wireless. You use it. It's like a laptop. You plug it in. You plug in a special module to the car, and this you can walk around wirelessly. And what it'll do, it'll allow you to observe the computer codes on a car. It'll allow you to watch the car's heartbeat. It'll allow you to push the car through its paces. In other words, make the diagnostic system in the car stand up and do dog tricks and tell you what it's doing. And then you can go out and look at what the manufacturer says to do about that data. But then you can do our special proprietary data, access our proprietary data that will tell you, boy, 90% of the time when the car's saying this is what you do. Okay. Shortcut all that stuff.
And the other guys
it's a great one.
Like it.
Nothing like it. Nothing like it.
At the same time, you've got some basic stuff that people don't have that just are equal to the times.
Right.
Like this.
Right. Like this. Well, this thing, you know, we're all talking about hybrid cars.
Right.
Well, hybrid cars have 300 to 350,000 volts kicking around inside the car. Well, this thing will insulate you to 1,000 volts. You don't want to be fooling around those batteries with just a tool without being insulated. And we've got a whole line of tools that'll do that. So every time a car changes, we have new things to bring out, and that's what organic growth is. If you're talking about 7.3% in growth, you're talking about bits and bytes and tools and aligners and lifts that we sell more year over year. That's what happened this time.
All right, so what we talk a lot about the Internet of Things and the connected car, but we don't talk about the fact that they can't be fixed by AAA when they come to see you.
No, that's exactly right. Well, today, you know, cars are getting more and more complicated. For example, there used to measure in 95 or so, in the 90s, used to measure engine codes on a car in the tens.
Okay.
Now you measure them in the thousands. And if you look at, this is the wave of the future, those diagnostics, this kind of thing that I just talked about. And this is the wave of the future because if you go to independent garages, older cars, you know, the aged cars, 4 in 10 repairs need something like this. You go to new cars, it's 7 in 10. So pretty soon everybody's going to need this, and we have a full range of products. We have this top of the line that'll deal with the most complicated repairs. We have this one over here, which I talked about last time on your show, which just the maintenance repairs. If you want to change a battery these days, sometimes you have to reprogram something. If you want to change the oil, you got to do some things.
Now, at the same time, we're not even talking about overseas. Now, I know that people think that China weak. We also have military. That's been a little weaker.
Right.
Ag, oil, and gas. Why does it not matter? Why has it not brought down your earnings?
Because we had a lot of different places to go, you know. We're just penetrating we're just starting to penetrate to some of those things. So military was down.
Right.
Oil and gas was down, but mining was up. General industry was up. Heavy truck was up.
Are there more car dealers? Are there more?
No.
That's still not that way, right?
There's no change in car dealers, no change in technicians. It's just the drive of the different changes in the vehicles. People always ask us, you know, there's a lot of new cars out there. They're going to sell a lot of new cars this year.
Right, 18
but
point, maybe 18.5.
It doesn't matter. The vehicle park in the United States has aged every year since 1980, big years and small years. That's an interesting thing. People have talked about this quarter. You know, people asked me a great question today. They said, you know, we have these headwinds. You got the headwinds that you talked about. And they said our OI margin was 17.5%, up 130 basis points. They asked me, are you cutting? Are you cutting? Have you cut back? No. We're investing more. We're investing more because we believe in these runways for growth, both in this kind of thing, new product, and in extending to those other industries, because we have faith that that's going to lead us to bigger and better things going forward.
Well, it has continually been one of the greatest stories that we've had on. I just wish more people knew about Snap-on, but we're not going to stop because you're not stopping. That's Nick Pinchuk. He's the chairman and CEO of Snap-on, SNA, one of the greatest stocks we've ever featured on Mad Money. Nick, thank you so much.
Thank you so much.
Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.